Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter on ABC News and a columnist for The New Daily.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist.
And we are the Money Café. In our new cafe.
In the new Camberwell Cafe. We're still settling into our permanent new home after your house move.
Yes. So that's good.
It was a 35-minute drive, Alan. So we're actually a lot closer to your new place than my place, I will say. But
aren't we closer? Aren't we now closer to your place than we used to be?
No. I've gone from 25 to 35 for my quarterly catch-up. My fortnightly
maybe we might have
Grandpa.
to find.
So no, that's all right. I used to live in Camberwell, so it's good to be here.
All right. So you've been doing tons of AGMs, and in fact, listeners, if you're a subscriber to Intelligent Investor, you can read Stephen's column, which is up today, in which he's gone through basically every AGM he's been to in exhaustive length, which is great. Actually, it's a fascinating read. Tell us about the 70 AGMs you've been to since we last met, Stephen.
Well, I don't know where to start, Alan. I mean, my head is just spinning. I've done 188 for the year. I've got 12 to go to get to 1,000 in total. And it was wild. I mean, on Friday was just crazy. There were 224 AGMs across the country on Friday. And these are the last day laggards. So you've got 5 months from balance day, which is June 30, to have your AGM. And more than 10% of all ASX-listed companies wait until the last Friday and hope that no one will notice their terrible profits, their tiny balance sheet. So it's they hope that nobody shows up at them to be beastly to them. And did you show up at many of these? Well, I got to 9
on that day
on the last day. Yeah, so.
Right.
And there was pretty wild stuff going on. Like you turn up and, you don't know what's going on. So I went to Big Tin Can, okay? They're a $140 million tech company. We used to use them for documents management at Manningham before we sacked them for Microsoft, okay? So they're a local IT company. And I said, I log into the meeting and there's a vote to take them over. That gets defeated. My old mate Earl Eddings, the former chairman of Cricket Australia, is running for the board, hostile, and he lost, 60% to 40%. Their 10% placement capacity request got rejected. So there's all these...
So it was a lively meeting. There was tons happening.
And then I went up to Brisbane after that. I went to this company called Sea Farms, which is Australia's biggest prawn farmer, and they've lost 300 million. And their chairman, Ian Trahar, he's down 80 million. And I said, mate, you've lost 80 million trying to get a prawn farm going up there in the Northern Territory called the Sea Dragon Project. Have you got any cash to keep going, Ian? He said, thank you, Stephen, for your concern for my financial position. But and then I went over to Perth.
So he's personally lost $80 million.
Yeah, he's personally lost 80 million, and he's still trying to get this enormous Sea Dragon farm project.
So is he broke or what?
No, he must be obviously worth more than that. He made money out of Gribble's pathology. He was a long-term business partner of the former Trevor Eastwood, the former Wesfarmers guy. So he's sort of a successful WA entrepreneur. Maybe he liked prawns, one of those sort of ex-bankers who loves a good prawn.
I'd say he had big dreams of selling tons of prawns to Chinese people and has not managed to achieve that yet.
Yeah, but they copped the second strike. They voted. Shareholders voted for a board coup. So there's a spill coming up. His offer of more financial support was voted down. And then I thought, can't get any wilder than this. So I go over to Northern Minerals, which is a WA company. They've got a rare earths project they're trying to get up near the WA Northern Territory border. And they open the meeting saying, the chairman's had an accident at home this morning and he won't be coming. He's gone to hospital. The auditor's stuck in traffic and is coming soon. And then there's a 48% vote for a Chinese director who the board didn't know. And so there's a big sort of China trying to get hold of this rare earths project. So they've bought all these shares and they put up this board candidate who got 48%. So there was almost a hostile candidate get up. And I said on the call, who is this guy? Oh, we don't know much about him. He just sent through his nomination and then 48% in favour. So the Fin Review's done a story, China Inc. almost storms onto the board of Northern Minerals. So And these are
how did you choose these companies?
Well, they're the only ones that are offering online.
Oh, I see.
Because the vast, more than...
Didn't you have to pay some of these?
No, you
paid $500
$500
a pop.
to play, yeah.
A pop, that's 9 times $500. Crikey.
Yeah, but no, look, my shareholding went from 30 grand to 95 grand this season just to get a ticket to ride to all these AGMs. I sold 17 grand's worth of stocks on Monday, first day after the season, to de-risk, because a lot of these tiddlers, will go broke.
Oh, you're
or
buying
whatever,
you're buying the coffee then, Stephen.
Well, that's right. So yeah, but look, more than 200 of those 224 don't offer online access. So I only go to the ones that...
Right.
I mean, I've done 3 physical AGMs this year. I was giving Andrew Demetrio, the old AFL CEO, some sticker to takeover vote on Monday. But the vast majority is online. So my whole campaign is offer online AGMs, offer hybrids, because then you can do them at scale. And it's good fun. So
it's good fun.
Yeah, so no, it was a good season. And now I don't know what happened at half the meetings because you haven't had time to go back and look at the webcast. So I've lodged 850 questions for the season.
All right. So what are you going to do with yourself now?
Well, I'm going to write it all up.
You'll be at a loss. You won't know what to do with yourself.
No, there's a whole... I've got to get to 200 for the year, so I've got to get 12 more.
Why do you have to get to 200 for the year?
It's a nice round number to finish the year at 1,000. So... And there's a whole bunch coming up. There's Myer on December 10, the Westpac, NAB and ANZ, Incitec Pivot, Orica. So there's all these September 30 companies which rush their AGMs before Christmas. If they were doing what everyone else was doing, they'd be waiting until February 28 to have their AGM. But they all like to get it done before Christmas. So if you want to have a final little pre-Christmas push, there's quite a few big caps that can tickle your fancy.
Hey, Myer's doing all right, aren't they? Their shares are up strongly.
They're booming.
I mean, I keep reading broker reports saying Myer's a buy. It's coming good. It's going to be great.
So December 12, I think it is, the AGM, Olivia Worth as the executive chair. It's a hybrid. So Solly Lew hasn't shut down the hybrid yet because he shuts down hybrids everywhere else at Premier Investments and Breville. But look, their related party deal with Premier, it's seemingly adding value. So, Myer is back.
Yeah.
Now, Alan, are we at the top of the market? Because all these smart people are selling at the moment. Have you noticed? Just in the last 2 or 3 days?
Totally. There's been a lot of selling by insiders.
Correct.
I think it's partly because it's the trading window, right? All these companies have a window that they can trade their shares in, and this is now because it's after the after the results, AGM and so on.
Yes.
It looks a bit sort of rushed and that, but it's just simply the window.
Yes, but I did love the way your favourite company, the 2 founders, Sam Huppert and Anthony Hall.
My favourite company being Pro Medicus.
Pro Medicus, yes. Their combined stake is now worth $12 billion because the stock's at more than 250. So they've sold $500 million worth of shares yesterday.
Yeah, well,
biggest ever sell down. But they pitched it as institutional investors approached us.
Right.
We didn't want to sell, but we were approached.
Look, it's time they got a yacht, I'm sure. I mean,
yes,
they can't be self-respecting billionaires without a yacht.
Yes.
And apparently also billionaires have to have a bunker too. They've got to have an expensive bunker to get into when things go south.
I agree with the theory that anything more than 20 mil, life is too complicated. 20 mil is when you stop worrying, but anything more than 20 mil, it's hard to manage. People will come after you. So the perfect number is to get a $20 million pile and then just retire and that'll look after your family and no one will give attention to you. You can manage it yourself.
I'm definitely going to stop when I get to 20 million.
Well, Paul Keating's got past it. Did you see that?
He sold something for 30 million. What did he sell?
He sold his 29% stake in Boost Mobile to Telstra.
I didn't know he had that.
More than 30 million. Clever guy.
So that's great. I'm delighted
he's
that
your
Paul...
mate. I'm surprised he hasn't told you yet.
I'm really delighted that he's made a bit of dough and he's exceeded the $20 million, your $20 million limit.
Yes.
So now life's going to get complicated for Paul.
Yes, but much simpler business than whatever it was, piggeries, and it was more complicated in the past, his business career. But look, well done to him. And then the Chinese Sovereign Wealth Fund, the CIC, last night sold $1.9 billion worth of shares in Goodman Group at $37. Now, they bought that, they put $500 million in to bail Goodman out after the GFC. Now, the Future Fund should have done this, but instead it was China Inc. that bailed out Goodman Group, and they've made $6 billion in total, and they've just cashed out for 1.9. And then the other top of the market is the founder of Zip. Larry Diamond has just sold $100 million worth of his shares, which is 2/3 of his holding, the day after retiring as chairman, when Zip shares have gone from 38 cents to $3.51 in a year. Smart money.
Almost a 10-bagger.
10-bagger, but it was at 12 in 2021. It went from $12 to 38 cents back to $3.51, and the chairman has gone, see you later. I'm setting up a family office and a charitable endeavour. And the stock held up. But it's an interesting insight as to the top of the market, which I believe we are at right now.
Which doesn't necessarily mean there'll be a crash. I mean, it might mean that, I suppose. Somebody else asked me that this morning, and the answer is I don't know whether there'll be a crash or not.
Warren Buffett's got $450 billion of cash. He's ready for the crash.
But the market's definitely not a buy.
No.
I mean, it's...
Well, as you said on the news, Commonwealth Bank, it was expensive 12 months ago, and then it's gone to 100 and...
It's gone up 60% in 12 months, having been expensive 12 months ago.
Yeah.
So, I don't know.
Yeah, it's all looking very, very toppy. And
It is.
And what about, have we reached the top of the housing market as well? I saw some sort of piece on the ABC about, clearance rates are below 60%, prices have fallen in Melbourne and Sydney. Could we have hit the top of the property market and we're on the way down now? What's your take on that?
Well, it's interesting. The difference between housing and share markets, is that we hope we've hit the top of the housing market, but we don't hope we've hit the top of the share market. I mean, what I mean is that when the share market goes up, that increases wealth. It's great. Everyone likes it. There's no real problem with it. The housing prices go up. It's bad because housing becomes more unaffordable. So house prices in Melbourne are falling, have been falling for a while. Only just started falling in Sydney. I had a graph on the news 2 nights ago showing cumulative housing completions over the past 15 years. The highest is, the largest number is Victoria. I think it's 850,000. Next highest number is New South Wales. And there's a direct link between the number of housing completions and house prices. So supply has gone up the most in Victoria, and as a result, house prices are starting to fall. So...
and we are still on the way to surpassing Sydney as Australia's biggest city within the next 20 years. Melbourne. So it's been a long-term trend, this. We've still got more developable land.
Yeah.
And so we are chasing Sydney down.
Yeah, sure, but who cares, really? I mean, what we need is an oversupply of housing for a long time so that house prices don't keep rising. But the trouble is that we're also used to having wealth creation through housing, and housing being an investment asset and a market, as opposed to an essential for life. That none of us really want house prices to stop rising because we're kind of depending on it to increase wealth.
The household balance sheet, that's right. The world's most indebted households, our balance sheets can't handle a 20% housing correction.
I know, but the thing is that we've also got the worst household disposable income experience largely through the amount of debt that we've got. So, look, something's got to give. I mean, I do hope that house prices don't rise for a while. That's what we need. I'm afraid that that might not happen. We've got GDP today, which at 11:30, the consensus forecast is 0.5% for the quarter, 1.1% for the year. So very, very slow growth, But GDP doesn't mean much to most people. I mean, big deal. The one that everyone's going to look at, which will get reported on now, I think, is GDP per capita, which has been falling for 6 quarters in a row. That's 18 months of per capita recession, and I expect it to extend for another quarter, 7 quarters in a row of declining GDP per capita. So that's, I guess, the thing to watch today. The other thing to watch is government investment, government spending, or government demand, more broadly speaking, which is a combination of investment and consumption spending by governments, which we learnt yesterday contributed 0.7% to the growth in GDP, which is expected to be 4.5%. So government spending contributed more than the total growth in GDP for the quarter. So that therefore you can say that it's all about the government spending, and the demand is responsible for the entirety of Australian economic growth.
And a lot of that is in the States with their massively unsustainable debt-funded infrastructure splurge.
Yeah, you could put it like that.
So at some point, I mean, if Australia went into a net balanced budget for the public sector, it would be massively contractionary for the economy. I think that's what you're saying. So we are on a state debt-funded economic growth trajectory with rapid immigration. The other big driver.
The other big driver is
nominal
immigration.
growth in GDP.
That's right.
Yeah.
And so without those two things, we'd be in a big old recession.
Yeah, that's right.
Which have been going on for a long time.
But the markets are continually happy to lend to Australian governments of all descriptions. And also we should briefly mention interest rates, Alan. I mean, the bet we had with they're not going to move for 2 years. I mean, we must be getting close to a year now. So you might be halfway
I'm looking
home.
good. I know, I'm looking
good, man.
Sure. Absolutely.
So
I think I'm going to be right.
Yeah. And I loved your Reserve Bank pieces about the prosperity and welfare that you've been putting out across multiple channels of late. So you should just take our listeners through that, how the Reserve Bank is no longer got as one of their 3 pillars, maintaining the prosperity and welfare of the people.
Yeah, so since the Reserve Bank was created in 1959, it's had 3 objectives. Number 1, the stability of the currency. Number 2, maintenance of full employment. Number 3, the prosperity and welfare of the Australian people.
Oh, stability of prices, not the currency. Stability of prices. Not stability. No. You said stability of the currency. Is that right?
That's what it says.
Oh, it says currency. Okay.
And so there's, in relation to the objectives of the Reserve Bank, the RBA review last year recommended 2 changes. One was the first one change from being the stability of the currency to the stability of prices. Mm-hmm. So that just to make it more direct, because the stability of the currency implies inflation. Yeah. They've just suggested, why don't we actually say inflation? And the second recommendation, which nobody really paid any attention to at the time, was that they removed the third objective of the prosperity and welfare of the Australian people and make that an overarching purpose as opposed to an objective.
Which is kicking it into the long grass,
that's what
you described it beautifully.
And that's been implemented by the bill that was passed into law last Thursday, among 31 others.
That was the equivalent of the last day of the AGM season.
Exactly.
35 bills on one day. Crazy.
That's it. So anyway, one of them was the RBA reform bill, which and most of the attention has been on the creation of a separate monetary policy board, which, that's interesting. But nobody's paid any attention to the removal of the prosperity and welfare of the Australian people as an objective. Mm. And the thing is, as I pointed out, that when the RBA review made that recommendation, cost of living crisis wasn't really going. This was, 18 months ago, and, interest rates hadn't gone up that much. But now the prosperity and welfare of the Australian people is an issue, even though we've got inflation falling and low unemployment. So
none of this 11% unemployment like in 82 and 92, isn't it? 4.5%. That's boom times.
Yeah. So the view of our economic betters has been that the prosperity and welfare of the Australian people is entirely dependent upon inflation and employment. So you only need those 2 objectives to further the prosperity and welfare of Australian people.
And my view ignores the working poor.
So that ignores the working poor.
Correct.
So here we are with, the working poor are really struggling in Australia. The prosperity of the welfare and welfare of Australian people is in the toilet.
Mm. What's a better measure? It's probably net wealth per person.
Well, that's the problem.
That's probably the best. That's the prosperity measure, and that then takes in inequality, doesn't it?
Well, sure. You can't really measure it precisely. It's more, and that's what the Reserve Bank review said. The problem with that as an objective is that it leaves the RBA with too much discretion. Mm. And the other objectives of inflation and unemployment or employment are measured precisely by the ABS, and therefore the RBA can be held to account. But arguably, the discretion that's provided by a broad objective of prosperity and welfare is okay. Anyway,
I'd like to see an objective.
We need to move on to the questions because we've got so many questions.
We have.
But before we do that, let's have a quick word from our sponsor.
Get a head start on your financial goals for the new year with InvestSmart. Invest in any of their capped fee portfolios and they'll add a $100 bonus to all new accounts opened and funded in December 2024. Whether you're after conservative, high growth or global exposure, you'll find a portfolio to suit your goals. Visit investsmart.com.au to learn more. Remember, past performance isn't a promise of future success. Terms and conditions apply.
Okay. Alicia has the first question. Why hasn't Alan attended a Michelle Bullock press conference? You would have some zingers like, what if unemployment stays low and you keep interest rates steady and you compromise your mandate of Australian prosperity? From a poor working woman, Alicia. Well, there you are. You are emblematic
of what we were just discussing.
So
what would you ask the Gov if you got to interview her or attend one of her press conferences?
Oh, I don't know. I mean, I don't want to go to the press conference. I can't imagine anything worse, to be honestly.
Well, okay.
Schlep up to Sydney for that.
But you do so many CEO interviews behind our paywall, which I love listening to. If you got Michelle Bullock on the blower for a half-hour interview with Alan, what would be the couple of issues you would really grill her on?
Well, I'd grill her on what we were just talking about. What's wrong with having prosperity and welfare of the Australian people as an objective? I mean, one of the reasons that the RBA review said that we don't need that as an objective is because the RBA ignores it. So it won't be a change. We'll change it. We'll get rid of it as an objective and it won't make any difference to the RBA. And that's what they said, right? Well, why is that? I mean, what's the problem? And she would probably say, well, it can't be measured. And,
But surely your focus would be, when are you going to move interest rates? I mean, that's the whole,
Yeah, but she won't tell.
What's inflation got to get down to before you cut it off? I mean, that's the old. At the end of the day, what she does with interest rates is all that anyone ever cares about.
Yeah, but that's an easy question.
Yeah.
She just, she just sort of straight back down the wicket, ball picked up by the bowler. Come on.
Yes. Anyway, sounds like you're not going anytime soon to Sydney for a Michelle Bullock press conference, and fair enough too. There's 20 other journos. It's like big AGMs. Who goes to a big AGM?
Well, and every journo gets their turn. You get to stand up. You ask your little question, and Michelle Bullock doesn't answer it, and off we go.
Yeah.
No.
I'm with you. Just go to AGMs where you're the only person asking questions.
Magnificent.
That's more interesting.
Yes.
Now, Richie says, could you please explain why the Australian dollar keeps falling against the US dollar? In the last few months, the US have reduced interest rates twice, sent billions of dollars of support to Israel and Ukraine. Australia, meanwhile, have kept interest rates steady. So, look, Alan,
first reason is the Chinese economy is weakening.
Yep.
Commodity prices are falling. The Australian dollar is a way of betting on the Chinese economy.
Yep.
And so that's number one reason. The other reason is that the US dollar has been rising. Even though interest rates have been cut there, I don't fully understand why the US dollar has been rising.
There will be less interest rate cuts going forward.
That's true.
And it's the Trump bump. Good for corporate Australia, cutting interest rates.
It's felt that inflation is going to rise with the Trump tariffs.
Yeah.
Which is true if he does the tariffs, that's for sure. So that's why the US dollar has been rising.
Yeah. And people also forget that American prosperity with big tech has never been relatively more dominant than ever before. And currencies ultimately reflect the prosperity and wealth and strength of a particular economy.
Yeah, but the place is going to descend into chaos now because they've got rat bags on the cabinet.
But the market is saying that it's not.
Absolute rat bags. Look at them all.
Yeah, I agree. But look, we've almost had a coup or a martial law in South Korea. Gee, the world's going crazy at the moment, isn't it? Like Georgia, the Turks are backing the retaking of Aleppo because they're annoyed that Assad wouldn't engage in some discussions about getting 3 million Syrian refugees out of Turkey and back into Syria. It's an amazing time.
It is
geopolitically.
Could be a good time to go to Tassie and get under the doona.
Now, Dave had a similar question about recessions and economic cycles and why we haven't had a recession for 20 years and why asset prices are so high. And he's basically blaming money printing for the lack of a recession and asset price bubbles. Do you agree with Dave that money printing the world over is the biggest thing that's averted all these recessions and is putting all these asset bubbles into play?
Well, it's not just money printing. Money printing is relatively recent. It began with the GFC. But it's kind of more, I think it's more to do with interest rates being cut and making money cheaper. I suppose Dave is kind of referring to, more broadly speaking, the creation of cheap money.
Yeah.
Whether
Zero
it's
interest
money,
rates and endless printing of money is a massively stimulatory thing.
no doubt about it. Sure.
And with COVID and the GFC,
Absolutely
it was
true.
used to get us out of trouble.
Totally. Norma says one of the biggest drivers of inflation of the past 2 years has been insurance. The insurers blame climate change, but most have recorded massive profits and huge bonuses to executives thanks to growing profits by increasing premiums and not growing customer numbers. No more so than IAG, who have announced they will be taking over the RACQ insurance in Queensland, and so on. So, what do you think? Is this true, Stephen?
Look, I don't think that
are insurance companies ripping us off?
Well, I don't think that insurance prices are the biggest driver of sticky inflation, but the share market is an honesty machine, right? And so I had a look at the valuations of our big insurers, and QBE now has a market cap of $30 billion with its shares at $20. Suncorp, its shares are almost $20 and its market cap is $25 billion. And IAG, its market cap is also $20 billion and it's at $851. So the big insurers are making out like bandits. Their market caps are absolutely booming. That's $65 billion for the big three. But, you know, the big four banks plus Macquarie are worth $600 billion. So the financial sector is booming, and I agree. The insurers should not be putting their prices up as much as they are. Just got an $850 insurance bill from the RACV yesterday, you know, and I think they've got huge pricing power, and I reckon the ACCC may block Insurance Australia Group's attempt to buy RACQ for $890 million.
Norma seems to be suggesting that the insurance companies are using climate change as a cover for putting up their prices, and she may be right.
I think they are a bit of an oligopoly. They have a lot of pricing power and they should be offering more relief to customers, just as the big banks should also be doing. Now, Lockie's got an interesting question. BetaShares direct brokerage app has removed brokerage fees for all ASX-listed ETFs and the top 300 ASX-listed stocks, and there are no hidden management fees from what Lockie can work out. And Lockie's just trying to say, how is this possible? How are they making money if they're offering something for free?
Well, it's interesting. Free brokerage is increasingly becoming...
It's becoming the way it happens.
Becoming a sort of an added benefit for other things. So people who get their money from clipping the ticket will give you free brokerage to attract customers. And I think that's obviously what BetaShares is doing.
Yeah. I mean, I've been a long-term loyal ComSec man, and they used to charge me $10 to buy $500 worth of shares. Now it's down to $5. They used to charge me $10 to go in and out of the margin loan. Now that is free, but the margin loan is 9.65%, and if I've got less than 10 grand in cash with them, they're giving me 0.35. So the Commonwealth Bank is ripping off all their ComSec customers big time on the interest they're charging and the interest they're paying for those with their margin loan product, and so they can afford cheap brokerage because they're making their money in other ways.
I'm shocked.
I'm shocked. BetaShares doing the same thing.
I'm shocked.
Well, Commonwealth Bank, they're only worth a lazy $265 billion with the stock at 150. I don't think they need to charge 9.65% to their margin loan customers, and I think they should be paying more than 0.35% to those with their money on deposit with them in the ComSec margin loan section of their business.
The profit's nowhere near enough, Stephen.
You've obviously got a few shares. I've only got, I think, 2 Commonwealth Bank shares.
2?
So, 2, yeah. Yeah.
That's
maybe 3.
That's $300 worth or something.
Yeah. It's gone well.
Andrew says, comments last week that the increased cost of housing through construction costs is from the pandemic and immigration. This can't be true. Isn't the real cause a long run of global money printing? Another money printing question. driving inflation, filling the pockets of the rich and driving inflation, pain for the poor. I don't ever remember a homeowner, i.e. the wealthy Australians, writing into the Money Café complaining about house prices. Yes, well, fair enough.
Look, it's complicated.
Well, the pandemic did increase the price of concrete and steel. Steel's come back down, but it's settling well above where it was before the pandemic. Concrete prices are up 30%. So the answer is that the cost of building an apartment is much higher now than it was, and is now, in fact, uneconomic. Developers can't make money from building apartments.
I think there should be some sort of inquiry into this. Like, one of the 9 AGMs I went to on Friday was a property investor called Qualitas, which is a very well-respected, developer and investor, billions of dollars. And their co-founder and CEO, Mr. Schwartz, said that construction costs have gone up 40% in the last 3 years and haven't gone down.
Yeah.
And that is a massive thing. I reckon there needs to be more focus on what are the components of the 40%. How much is it the CFMEU and enterprise agreements?
Well, there's an element.
How much is it taxes from the governments?
Well, there's an element of all those things. I mean, government taxes have gone up a lot, particularly state government taxes.
Yeah.
And a developer tells me that as soon as you put up a crane, you're in trouble because you have to unionise the site.
You've got to fly the flag.
You've got to unionise the site, and that's going to add, he says, 15 to 20% to the cost of construction.
But you've also got Boral shares booming, for Kerry Stokes. So, they've jacked up concrete costs big time. There's not enough quarries. Blue Scope steel is booming. So, look, there's, the price of iron ore feeds into steel costs.
So the bigger question is this a market failure, given the fact that housing is an essential and a human right? Do we have a market failure that the governments need to address and do something about? Now, what they do about it, I've got no idea really, but because the cost of cement is what it is.
Yes.
But anyway.
But you certainly couldn't get away with, Singapore style, cheap labour in labour camps, and we have the highest minimum wage in the world. We don't have construction workers in our skilled migration programs particularly, and labour costs are a part of it, but there are a few other factors. Now we've probably got time for what? Couple more.
Two more.
Wes, you go.
Go on.
Wes was just reading an article about the scandal of Jim Chalmers and the Future Fund with this mandate to invest in things like fixing the housing crisis. What do you think of Labor reaching into the Future Fund and
it's not a
telling it
mandate.
what to do?
The publication, what Jim Chalmers said they're going to do is ask the Future Fund to consider investing in national priorities such as housing and infrastructure and renewable energy. Well, okay, of course the Future Fund should consider that. Why not? Consider it. And if they reject it, fine. They'll tell Jim Chalmers to go jump in the lake. Well, okay, that's fine. I mean, I just think it's such a rubbish argument, the way that they're carrying on about it.
Yeah.
Secondly, the Future Fund was established to fund public servant pensions.
Majority military. Defined benefit generous military pensions. That's what it's for.
It's not some sort of separate, independent, sovereign wealth fund.
Yeah.
It's simply designed to take the funding of public service and defence pensions off the annual budget, right? Well, okay, if the Future Fund invests in something that has a lower return than it would otherwise have, and it falls a bit short, then the government's simply going to have to pay a bit more out of the annual budget. Well,
correct.
So
big Costello was looking for a hollow log. He wanted to pay off all the bonds with all these budget surpluses, and they said you can't get rid of the bond market. So he left 58 billion of bonds there because you've got to have bond markets to price up interest rates. So he then set up the Future Fund, which he just should have pumped the cash into the federal schemes, the CSS and PSS schemes, and made them fully funded. But instead he did a big song and dance, pretending it was a sovereign wealth fund when it wasn't. It should have been called the Past Fund for past public sector pension liabilities.
Exactly.
That's what it was for. It's performed beautifully because it's just invested all over the world and not too many equities. Leave it
Well,
alone. Leave it alone to keep performing as well as it does.
And it's invested in a boom. It's just
But
been lucky.
It stuffed up the GFC when the Chinese sovereign fund was buying 17% of Goodman for $500 million in 2009. That's when the Future Fund should have done that. I mean, the Chinese Chinalco bought 11% of Rio Tinto during the GFC at rock bottom. The Future Fund should have done that. So they didn't buy enough diamonds in the rubble in the last crisis we had. Let's finish with Curtis.
Okay. Curtis says, what can investors do to incentivise fossil fuel companies to stop drilling for oil and gas? If everyone who is a current shareholder of companies like Shell, Exxon, Woodside, etc., simply sold their shares, wouldn't their stock prices go down? And the companies would have no choice but to change business tactics. It's worrying to think that governments keep subsidising what should be an industry in decline. Well, yes, it is going to be an industry in decline.
But it will not be wiped out by selling your shares. Like the tobacco industry has not been wiped out by people not investing in tobacco. It's actually provided very good cash returns for those who are prepared to hold their nose and continue to exploit people with addictive tobacco products. So
I was reading an interesting article the other day about the history of the development of lithium-ion batteries. And in the 1970s, the outfit that was doing most of the work on developing lithium-ion batteries was ExxonMobil because they thought that there was going to be peak oil and that their business would go into decline and they needed to do something else. And so they were developing batteries, right? It quickly became apparent to them that there was going to be okay. The oil business was fine. And so they got out of lithium-ion batteries. Isn't that funny?
Yes, but look, the fastest way to get rid of fossil fuels is more through government policy. It's not issuing licenses to open new coal and gas fields and mines. That is actually, and to massively support and encourage solar and renewables and electric vehicles and all this sort of stuff. So it's a much better solution. But if you feel better for selling those shares in BHP or Woodside, good on you. But it won't actually speed up. It's more effective getting insurance companies and banks not to lend to new projects. It's more effective to go after the bankers and the insurers than it is to go after the equity holders if you're looking at a capital strike to try and shut down an industry.
Yes.
If you can't get insurance, you can't operate. The world doesn't operate without insurance. So get the world insurance industry to refuse to insure any new coal mines and you'll be much faster to the answer than getting Aussie Super to sell all their coal shares.
Well, I've been saying for a few years now, and I still think that there'll come a time when the world will hit the panic button because they'll realise that this climate change stuff is actually real and it is a real problem. And everyone's going to go, oh, crikey, we better do something. And they will shut down the oil and gas industry. Fossil fuels at some point will be drastically curtailed.
Oh, I agree.
At some point. That isn't happening yet. Carbon emissions haven't yet started to fall in the world.
That is incredible, isn't it?
This is since they've been having annual meetings on the subject since 1997 in Kyoto. Haven't yet managed to bring the carbon emissions down at all. But at some point, everyone's going to go, oh, bloody hell, we better do something because, we're underwater or... Anyway. So there will come a time, I think, when fossil fuel businesses will be in strife.
Yeah, but where the debate is now is Gina Rinehart allowed to develop all those gas fields in the Perth Basin that she paid $1 billion to Mineral Resources for recently? Will Woodside be allowed to do Scarborough? It's all those new... projects. That's where the debate
where we're at the moment
to
is
be at.
the answer is they are allowed to.
And the speed of closing coal mines. How quickly we close down all our coal-fired power stations. That actually is the debate.
Yeah.
Rather than equity strikes on existing global carbon emitters.
Well, that's it for today's Money Café. In a couple of weeks' time, is it 2 weeks' time? We've got a big final
end of year
three-hander with you, James Thompson and me all together, presumably in this splendid cafe, my other brother in Camberwell.
Oh,
well,
it's excellent. Yes, it's very good.
No, it's nice, and anyone who wants to come along in a couple of weeks' time, that'll be good. We'll say hello. If you've got a question for us for next week, when I'm going to talk to James Thompson, email us at themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report, etc.
And I'm Stephen Mayne, and we'll see you at our Blockbuster event in a fortnight.